Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Tuesday, December 3rd. We're going to take a look at a viewer's request here. Jeff Herlick commented yesterday on our Valet video. If you haven't watched that, go ahead and check that out. As usual, great video, and thank you for that. Could you please do a video on Western Union, ticker WU? And this is out of the financial sector. Thanks. And yes, we will take a look at Western Union today. This is one actually that has come up on the channel a couple times in the past. I haven't taken a look at it, but let's do so. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I typically do the Stock Pick of the Day video series here Monday through Thursday whenever the market's open. Yes, I miss on occasion. I was out last week, for example, for a wedding and for the holiday week. But typically Monday through Thursday when the market's open, you can catch these where we take a look at a stock that's pulled back on the day to see if it's presenting any value. And for those of you who are financially able, if you want to help out the channel and buy me a cup of coffee, there's the thanks button down below. Go ahead and click that. I think there's several tiers in there you could choose from, and really appreciate everyone out there who can do that. Those of you who can't, finances are tough. I understand that. No biggie. If you can do the other things, hit that thumbs up button, hit that subscribe button. Make sure you're subscribed, click that notification bell, and drop a comment down below. Let me know what you think of the videos. Let me know what you think of Western Union. Is it in your portfolio? Is it one you're watching? And a special thank you to the subscribers out there. You guys are awesome. Really appreciate you. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is the criteria we're going to be looking at in this video, in all videos. It must meet 5 of 8 to make it onto my watch list. Since this is a financial company, we're going to throw in price to book as well, and then it must meet 6 of 9. So we'll look at it at the end, see how it stacks up, and we'll see if it makes it onto my watch list. Well, let's jump back over to the company here. If you want to know more about this company, check them out at www.westernunion.com. That's www.westernunion.com. That is where I pulled this information from. About us, we help aspiring people and businesses around the world save, spend, and transfer money. And that's really their bread and butter, the transfer of money. They are out of the financial sector, empowering more. And I'll give you a little backstory history of mine. I used to work down in Texas as a construction manager, and we had a lot of Hispanic workers. And every Friday, whenever they'd get paid, they would head down to Western Union and they would transfer money back to Mexico. A lot of them did that. A lot of them had family back there, whether it was mothers and fathers that were stuck behind, whether it was wife and kids maybe still back home. They were definitely transferring a significant portion of their income, their check, back home to help out. And it was pretty typically through Western Union. So I know they use it. Now, there are a lot of money transfer companies out there now, so I don't know how much of a moat this one might have, as compared to like a PayPal or some of the other ones that are out there now. There's a bunch of them. That's what gives me a little bit of trepidation and pause about a company like this. But let's keep going. And transfer money, empowering more prosperous financial futures for their family, friends, and communities across borders. So they actually started in 1914 or 1814, if I remember correctly, or a little bit before 1861. I'm sorry, 1851, because it says here 10-year-old Western Union Telegraph Company, and that's where they started out, right? The old telegraph system, beep, 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 right? Sending messages like that. Completes the first transcontinental telegraph line and begins carrying messages from one end of North America to the other. I did not know that's how they started, but pretty interesting, and their history is kind of unique. You can see here in 1884, the Dow Jones Railroad Average Stock Market Index for the New York Stock Exchange, ticker NYSE, was created with Western Union included as one of the 11 original companies, right? So they were one of the 11 originals on the New York Stock Exchange. So they've been around since 1884, at least traded through the NYSE. Western Union offers the first charge card, like a credit card, in 1914. I think they still do. Western Union begins in 1943, begins offering inner-city commercial microwave services, making it one of the world's first wireless telecoms. Did not know they were even in telecom business at all, and it is kind of amazing to think that the first wireless systems were back in 1943. Let's keep going here. I think 2006 is really where they became the business that we know them as today, having shifted its focus from communications to cross-border money transfer, which is their bread and butter. Western Union becomes a publicly traded company on January 26th. The next day, the company sends its last telegram, right? So last telegram in 2006. and they really become focused on intercontinental cross-border money transfers. That's their bread and butter. You can read through the rest of them if you're interested, or check out their homepage for more about their history. Now, the reason we are taking a look at them, down 1.58% on the day, we are talking about the Western Union Company, ticker WU. Again, they are out of the financial sector. Closed out the day at $10.89. 52-week range as low as $10.51, as high as $14.19. So they are right up against their 52-week low here. Market cap of $3.697 billion makes them a small cap company. A beta of 0.89, so they are less volatile than the overall market. Though today there was quite a bit of volatility. That's a big jump up. Almost about 11.50, right? And then drop back down to 10.89. That's almost it is a dollar swing. Almost a dollar swing there. That's pretty significant for a company that's only trading at about 10.89, almost $11. Almost a dollar swing is pretty big volatility in my opinion. Price to earnings PE ratio sitting at $5.58 per share, but that's very low, though I'd have to compare them to other companies in the same sector, like a PayPal or some other money transfer company. EPS, earnings per share, is $1.96 per share. Earnings date February 4th through February 10th. Somewhere in that window is their next earning report. Forward dividend is 94 cents. I believe they're a quarterly payer. We'll see that here at the end, with a very high starting dividend yield at 8.48%. Ex-dividend date is September 16th, or was September 16th. They paid out on the 30th. Actually, they should have one coming up September. In December, I would think that'd be the 3 months. So I would think they would have another ex-dividend date coming up in December here, but we'll have to wait and see. 1-year target estimate, at least according to Yahoo Finance, where I pull this information from, they see it going back up to $12.83, not quite back to its 52-week high there, but higher than where it currently sits, a couple dollars higher than where it currently sits almost. Now, jumping over to the right, we're going to take a look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 5.84%. We compare it to their current 8.48%, or over here where it says forward, same number, 8.48%. And since their current dividend yield is much higher than their 5-year average, that speaks to undervaluation, and significant undervaluation, at least according to dividend yield theory. Payout ratio is actually low as well. I was surprised when I looked at this. 47.96%. I like anything under 75%, unless it's like a REIT or a business development company that typically pays, above 90%, even at times above 100%, where you want to look at different metrics for REITs specifically. Payout ratio is not a great one to look at because, like I said, they're oftentimes above that. But we're not really talking about REITs. So let's keep going here. This is a financial company, so we did throw in price to book. Now, we like 1 or below, but you can see here there's a couple different ways to use price to book. Again, 1 for financial companies, I use 1 as fair value, especially for banks. Anything under 1 being undervalued, anything over 1 being overvalued. Again, though, you'd want to compare them to other companies in a similar sector, like a PayPal, other companies that transfer money. I know there's other ones out there. Waymo, I think, is another one. If that's how you pronounce it, I think my wife uses that one. I don't use any of them. My wife does all that kind of money transfer with PayPal and Waymo and whatever the other one is she uses, not through Western Union. But there's several of them out there that you'd want to compare this to. But we'll look at their price to book. They are not above a 1 or below a 1. They're way above that at 5.74%. But I will say, going back here all the way to September 2023, so a little over a year ago, this is the lowest their price to book has been in some time, right? 7.72 back here, as high as 10.37 in June of 2024. So they are significantly cheaper now than they have been recently, at least over the last year and a quarter, but definitely not under the one that I look for financial companies. Dropping down, we're going to keep going here through their free cash flow. I want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends as well. 2021 here in December, you can see they were paying they received $830 million in free cash flow. 2022, that was a big drop to $373 million. 2023, that was a jump up to $635 million. Trailing 12 months, we don't have all of December's numbers yet, but so that does include part of 2023 numbers, but they're at $414 million in free cash flow. So it is a bit up and down with their free cash flow. They are repurchasing their own shares, $409 million in 2021. 2022 saw a decrease slightly to $369 million. So not only did their free cash flow decrease in 2022, they decreased their repurchase of shares. Further decrease in 2023 down to 308 million, even though their free cash flow was up. And then in the trailing 12 months, 393 million. So they are consistently buying back shares, which I do like that. Now, jumping over to stockanalysis.com, not affiliated with stockanalysis.com or Yahoo Finance, just two sources of information I go to, and I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. As you can see here, this price target was last updated October 24th, so that is outdated. It's a little over a month old now, and that's the thing about some of these companies. Unless they're updating every day, and you know that, they could be outdated information. That's why I recommend more than one source. But 7 analysts do recommend a hold on this one, and they're close to a sell, right? So this would be, if you go to their website, stockanalysis.com, you'd see strong sell, sell, hold, buy, or strong buy, and you'd be able to see how many of the 7 fall into each category. It looks like more are calling it a sell or maybe a strong sell than are calling it a buy or a hold. That's why they're leaning towards that sell, though overall they are calling it a hold. Low estimate of $11. It currently sits 0.5% under that lowest estimate. If it came back up to their average estimate of 12.86%, that would represent a 17.5% increase. That's pretty close to what we saw with Yahoo Finance's one-year estimate. And if it happened to hit their high, which would be a new 52-week high of $15, that would be a 37.05% increase where it currently sits. And all the while, you could collect that 8+% dividend yield that they currently offer. Now, jumping to statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. And I like 10% or better for both of these metrics. Now, return on equity is smoking high, 106.69%. I believe that's the highest I've ever seen. Return on invested capital is above the 10% I look for as well at 15.63, so we'd get a check there. EPS growth forecasted over the next 5 years, I like 5% or better. They're sitting at 3.21%, and revenue growth is positive at 0.85%, though it's very low. Now, looking at their dividend history, they are a quarterly payer. Again, payout ratio is low at 48.22%. Anything under 50% is low in my opinion. Dividend, and I like under 75%, so it's much lower than what I look for, at least on the top end. Dividend growth is non-existent, right? They don't have any. They've been sitting on the same dividend for some time now. Their buyback yield is positive at 8.23%, and shareholder yield is positive at 16.88%. Going back all the way to 2022, they've been paying the same 23 cents and some fractions of a penny all the while. They do pay out on the March, June, September, December timeframe like most companies do. All right, let's go through it. How does it stack up on the screener? Understand the business. That's where we started. Check there. Free cash flow is up and down, so no check. Growing dividend, nope. It's been stuck at least since 2022, and I did look at going back even further. It's been kind of frozen in time for some time now. Dividend payout ratio is 75% or less. Yes, it is actually under 50%, so check there. Dividend yield theory says it's potentially undervalued. Check there. It is within 15% of a 52-week low. It's not in my one of my positions, but it is within 15% of a 52-week low. So check there. Return on invested capital, return on equity are both over 10%. So check there. It did not have earnings per share growth over 5%, just under at 3.12, I believe, if I remember correctly. No check there, and price to book was above 1 at 5, so no check there. So we're looking at 1, 2, 3, 4, 5. Unfortunately, it does not make it onto my watch list. It must meet 6 of 9. Jeff, that does not mean it doesn't make it onto your watch list or into your portfolio. This is just mine, so take that with a grain of salt. But for me, and this is typically where it's been at, for me whenever I looked at it in the past, it just doesn't quite make it there, and typically it is that price to book that keeps them off, and the earnings per share growth typically is low as well. There are some other metrics. I would look at this one if I was interested. I would go into their balance sheet, their income statement, make sure their revenue is growing. I did look at that slightly. It has been declining for some time, which is also a concern of mine. Their margins are good, but they haven't really been growing. Some other metrics you want to look at for this one if you're really interested. But it could be worth taking a gamble on. It has a low cost of entry at around $10, $11 per share, and the dividend yield is quite high. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. And hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a suggestion like Jeff did here for a company to cover on the Stock Pick of the Day series, go ahead and drop it down below, and I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a counselor or certified financial advisor.